Hello, it's Adil bringing you a review of or a live analysis or review of the US markets on behalf of CFDs.com, acting as an analyst on behalf of CFDs.com. Certainly visit their website at cfds.com and certainly try the demo account and the live account. A very solid, reliable platform, and there certainly is a bonus for new trading accounts as well. Okay, so with regards to the US markets, let's try and sum this up, folks. Okay, so the economic data has been mixed. Okay, the actual US data that came out today, the mortgage applications lower than expected, the red book actually lower than expected as well. Okay. Having said that, though, we had German consumer confidence slightly higher than expected, although the French data was actually weaker. The markets have short squeezed higher based on a false rumor or false assumption or presumption that there is going to be some sort of Greek deal. That obviously isn't the case because Mr. Schäuble, in a television interview, we haven't progressed much in Greek talks at all. German government officials surprised by earlier Greek reports that progress has been made. So the markets are obviously short squeezed higher, reversed yesterday's losses to quite a substantial amount, as I'll certainly explain. Now we have oil at the lows, we have copper at the lows. Okay, I mean oil is actually making a new low as we speak. So what's changed from yesterday? Nothing really. Okay, the dollar obviously is certainly moving higher, still holding its ground, with the Aussie and Kiwi languishing, the euro languishing as well. So certainly nothing has changed. Okay, there's no deal yet with regards to Greece. If anything, the Germans are totally coming out and being very blunt and stating that no progress has been made at all. Okay, so what's causing this rally in the US markets is beyond me. Okay, so as they always say, the markets can remain irrational longer than me and you can remain solvent. Okay, so it's a real test. So adhere to your stop losses. Okay, and certainly always employ good money and risk management and keep trading. Okay, folks, so the US markets, let's try and assess this now from a technical perspective. So let's bring up the actual US markets. First of all, will be the S&P 500. Okay, let's see exactly what's happening here. So let's go to a daily chart and see what the actual movement today has been. Okay, and let's try and assess this. Okay, so we have an inside bar thus far. Okay, so we obviously held the fib 50% retracement. Okay, the market is an inside bar, so don't get confused. Okay, those of you that are slanting towards a bullish bias, etc., just try and look at it from a bird's eye view and realize that it's an inside bar until that bar gets taken out and negated. My personal opinion of my own personal style of trading is always to remain bearish until the red candle obviously gets negated. But again, everybody has their own strategy and their own thought process and philosophy in the market. But on the daily chart, it's still an inside bar, so that certainly needs to be taken into the equation. Now that doesn't necessarily mean that that bar will obviously hold within the red candle. No, I mean if there is a catalyst. Is there a catalyst? The catalyst that has propelled the markets higher has been negated thus far because the German finance minister has stated that the actual reason for the markets to sell off yesterday was Spain, obviously Yellen hawkish and Mr. Fisher hawkish, the dollar obviously rising and obviously the yields rising, etc., etc. So the whole concept is hawkish nature. Interest rates are going to rise, the costs of obviously capital are going to go higher, emerging markets will come under pressure, etc., etc. Now, yes, I know Mr. Bernanke has stated that the emerging markets should not be concerned with a rate rise, and they've tried to obviously talk down any concerns, but the concerns remain and exist. Okay, so it's an inside bar on the S&P 500. Okay, now let's cross-verify that with the IWM, the Russell 2000. So allow me to bring that up. Also the Wiltshire as well. This is another index I generally tend to observe. So if I bring up the Wiltshire, let's just observe the Wiltshire and look at it on a daily chart. Okay, again, that's an inside bar, so horizontal resistance. So we have double top or horizontal resistance confirmed, i.e. the market has no longer made a higher high, and it certainly remains an inside bar thus far. Okay, now the actual IWM, let's just bring up the IWM now. Okay, so if I bring up the IWM, the the IWM has this H&S formation or right shoulder. Now we have the fib 75% resistance holding. We have a bounce from yesterday's sell-off, but nothing substantial as of yet. We haven't made a new high, so therefore, and given the fact that it's on light volume as well, can you see the sell-off yesterday was on stronger volume, the sell-off itself is on stronger volume, and the buy generally tends to be on lighter volume. So again, circumspect. The IWN, which is a smaller cap of the, or smaller version of the IWN, or IWM should I say, we can certainly observe here. Okay, so again into gap fill resistance. So this is your gap fill, and the IWM or N should I say is slamming into gap fill resistance. So again, the double top has been put in on the IWN, and the market is obviously holding this right shoulder, if you want to call it as such. Okay, and has held a fib 75%, and it's the same type of pattern. You've got the left shoulder here, those of you that can observe. Okay, you've got the head, which is a solid triple top, you can call that if you want. Okay, and you have this right shoulder that's below fib 75, and we are looking for a potential move lower with the neckline being over here. Okay, so watch out for the IWM and the IWN. They're certainly not indicating a bullish slant from my perspective. And again, look at the volume, epoxy volume on this move higher. So again, is this something that one should trust, etc.? Again, adhere to your own trading style and your trading strategy. My job is just to give you my insight and my interpretation of the markets thus far. Okay, so the S&P 500, as we've seen, is certainly into resistance, and certainly remains circumspect the move itself. Okay, so if I go to a 60-minute chart, given the fact that the daily chart, bear in mind, is an inside bar. Okay, 60-minute chart itself, obviously we've bounced off this gap fill here. If I just go to the 10-minute chart, you should be able to see that gap fill. We seem to be coming into the 50 MA on the 60 minutes. Okay, so if I just show you here, we had a gap level on the 13th of May, and that's exactly what the market did. It closed that gap. It broke out this falling contracting wedge pattern, obviously thrusted higher. It's now into 200 MA, it's into previous support equal resistance. So this level at 21.22, solid resistance for the S&P. Having said that, there is an unfilled gap above on the S&P at 21.26.25. So if the S&P continues, that's certainly a next level that we need to observe and watch. Now the 60-minute chart of the S&P 500. Okay, so the 60-minute chart of the S&P 500, we can use our Fibonacci retracement, take the pivot high, take it to the pivot low, and we're into that 50, or should we say 61 to 75% resistance. We have previous support, previous support equals resistance, okay, and the 50 MA resistance as well. So this thrust higher, very impressive, a 20 handle move plus. Okay, obviously we close that gap now, and this is going to be very interesting going forward. Okay, you do have horizontal resistance here as well, and here as well. Okay, so 2021, 21.25, 21.20, 21.22. Again, solid resistance. Now, given the fact that the Asian markets overnight, if I bring up the Asian markets, you can see that the Nikkei was more or less flat, the Hang Seng was negative, and the Shanghai, yes, it was impressive. It certainly moved higher. Okay, and given the fact that the markets have moved higher based on this false rumor that there's going to be a Greek deal, and that obviously isn't the case. As you can see here, I mean, dollar hits 8-year high versus the yen. Now, that's another factor as well. The reason why the US markets are stellar or short squeezing higher today is the USD JPY. Obviously, as we all know, the QE side effects and the talk of the 2% inflation target being pushed back, and the yen obviously collapsing, then that certainly does bear have a massive influence on the US markets, given the yen and the inverse relationship due to the QE factor. And as we all know, it's all about the Koolaid. As you can see here, the USD JPY has thrusted higher, and that's the reason why the US markets are certainly impressively higher today. Now, that's one thing that I didn't take into equation, or take into the equation in my analysis in the morning with regards to the move, or the seller move in the yen, or the sell-off in the yen, which obviously is causing a risk-on type environment. Okay, and that's certainly something that I haven't taken into account. So I've learned something today, okay, because I have been stopped out on 2 trades, thus far. Okay, so this is basically where we are with regards to the actual markets. Now I can bring up the actual yen chart for you as well. Bring up my I think I've shared the dollar chart on my European analysis. Let me just bring up the FXCM yen chart. Bear with me. Here we go. And as you can see, the yen itself has collapsed. Let me just zoom in here, give you a better angle for you to understand, because this whole move is a yen move, okay, to a large extent. Okay, so as you can see here, new low on the yen. Okay, so the yen itself is acting as a potential stimulus for US markets and is propelling everything higher, especially given the fact that the Nasdaq obviously sold off quite substantially the day before on the back of Apple obviously selling off as well. Now we are back into that resistance zone, so again Nasdaq certainly remains weak from my perspective, and it is a yen move as opposed to an actual organic strength, etc. Now the semiconductors again are into resistance. As you can see, they have negated the HNS formation, so that's something is a cause for concern if you are a bear. Okay, so have to respect that for now. We have obviously broken out and we are into resistance, or slamming into resistance on the semiconductors. Okay, the biotechs again, also biotechs are into resistance. The Nasdaq itself, bring up the chart of the Nasdaq, give you an insight with regards to the Nasdaq. Okay, the Nasdaq is into resistance on the 10-minute chart. We've closed this gap at 4526. We seem to be continuing to thrust higher, which is pretty impressive. Okay, 60-minute chart certainly slam bang into resistance. We did slam into the fib 75% resistance. We have taken that out, and we are into this resistance zone here. So you have 45, 42 as resistance. So these two levels will act as resistance. But what a move, folks! I mean, that is one impressive move. Especially given the fact that we had this unfilled gap below at around the 44.30 or potentially lower that need to be closed. Again, that failed to close, and the market certainly has had a stellar move. Okay, so have to respect that for now. Okay, but for now 45.40 will be resistance for the Nasdaq, and that in and of itself will cause the US markets to be into resistance as well. Now let's observe the Dow. This is an interesting one. Okay, so bring up the chart of the Dow. There we go, Dow Transports. Okay, so 60-minute chart obviously is broken. Now the daily chart is the one that we need to observe and watch, because that's the one that's telling us the clear signal that the Dow Transports are weak, and that will potentially send them take the whole market with it as well. Again, we need to remain open-minded, but for now that doesn't exactly look very bullish from my perspective. Okay, that's an inside bar again, and we've broken below support. That's not exactly a bullish chart that you'd want to be screaming and saying bye bye bye. Okay, so the Dow Jones, okay, has had a bounce. How strong this bounce will be, we have yet to find out. Whether it's a dead count bounce, etc., again, we have yet to find out. But from my perspective, it certainly looks like an inside bar, and you have the making of a potential HNS formation here as well. So if you look at your left shoulder, with it being here, okay, you've got the double top confirmed as well. You have an inside bar. You're looking at the right shoulder here. Okay, so given the fact that the Dow transportation already weak, and this certainly needs to play catch up. On the downside, you are looking at a potential sell-off, quite a substantial thrust lower, especially given the fact that there's no Greek deal. Okay, folks, so certainly bear that in mind. Okay, and that's the situation with regards to US markets. Can you see the volume, how weak it is on the right shoulder? Again, that certainly needs to be taken into consideration as well. Okay, folks, so that's the summation of the US markets. From my perspective at this very moment or current juncture, it does look as if it is into resistance, especially given the fact that the European markets are into resistance as well, and the performance overnight in the Asian markets was pretty lackluster. There is one chart that I do need to observe, which is a VIX. I just need to share that with you as well. See if I can locate it. Bear with me. That should give us more of a insight into the actual performance of the US markets. Bear with me, let's just locate this. One second, I'll have to find it from my S&P chart here. There we go. Okay, so the VIX is very interesting. Okay, so daily chart certainly seems to be making a potential bottom. As you can see here, we're into gap fill support now, and the fact that we haven't made a lower low again is a interesting scenario. Okay, so the VIX is potentially coming into support now, building some type of base. Hasn't made a lower low or a lower high. If anything, it's made a higher high. Okay, and now we're looking for either a base being built here or a potential higher low. So keep an eye out for the VIX, and especially given the fact that there's no Greek deal as of yet and nothing has been confirmed thus far. Again, that is a cause for concern. So again, watch out with regards to the VIX, and that will be the key chart I think going forward with regards to the S&P 500 and the US stocks in general. Okay, and that's my summation, folks. Okay, so on behalf of cfds.com, certainly visit the website cfds.com for those of you that are new to this platform. I am acting as an analyst on their behalf, so certainly visit the website, and there's plenty more projects and work to come from this organization, and also there are going to be webinars going forward as well. Okay, folks, so any questions, always feel free to email me. My email address is daytrader at inter-market-analysis.com. Certainly feel free if you want me to do a video on any certain particular variable. I'm always open to that, and certainly willing to help and provide my analysis on multiple variables in the market. Okay, goodbye now.